with half-drunk coffees staring at screens that look like a heart monitor, flatlining red everywhere, headlines flashing Iran tensions, equities tumbling, safe havens bid. And in the chaos, even the tech names, the ones we thought were untouchable, were getting slapped around. Then something curious happened. As the dust settled, a few tickers stopped bleeding and started dancing. Software names, especially those tied to defense and defense tech, quietly began to perk up. Not fireworks, but a changing pattern. It raises that old uncomfortable question. Is it over? Is the bottom in? And just as intriguingly as is software, of all things, becoming attractive again. This isn't one of those war is good for tech bumper sticker slogans, but history tells us that when uncertainty spikes, governments do open their checkbooks, especially on defense, security, and those digital tools that run them. Software tied to national security doesn't just get a look, it gets a budget. Are we seeing the early stages of a rotation, a flight to quality, or just a reflexive bounce and beaten up names? My next guest has her finger on that pulse of what's happening. Welcome to the show, Rebecca Walser. Thanks for being here.
Thanks for having me, Luke. Glad to be in with you.
Yeah, you're out there in Vegas. I'm jealous. That's awesome. So look, there's a lot to unpack here, and I want to focus more on the technology, that rotation kind of trade. I mean, I was with Bob Iacchino just a few segments ago, and we were talking about how when the market speaks, you have to listen. And one of the things the past few weeks, we were taking a look at was oil prices going up. And we did think this conflict was going to happen relatively soon, or something happening in the Middle East. So stock we added in the wake of this was Palantir. We didn't own Palantir for a long time. I didn't think we'd own that, but that's an example of listening to the markets. So when you listen to the markets right now, what are you listening to?
Yeah, so there's a bunch of noise, obviously, and it takes some dissecting. I do think that, in 2025, everything AI was a miracle, and obviously we had a bunch of circular financing going among the hyperscalers, but everything was great. AI was going to be the best thing ever, and then we get to 2026, and we start to go through sector by sector. AI is going to destroy everything and route everything, and then software as a service is out, and all of these things, Luke. And while that's true, it's really hard for me, right? Because ultimately, we do see this new frontier as the creative destruction of every status quo thing that we're currently doing. So everything will change. There will be an impact. But the impact is not going to be tomorrow. It might not even be by the end of the year. It might take 18 more months. So I definitely think that the tech route to the downside that was AI, spurred is paused. I think right now the Middle East tension, and we said at the very beginning of this year, besides just the midterm elections, we saw a bunch of geopolitical potential disturbances. I mean, all you had to do was look at the American fleet moving their armada to the Middle East, our armada, and say, hey, escalation is looking like it's going to happen with how much we're positioning all of our ships over there. So that has happened, Luke, obviously, and now Trump just literally said that he could see this continuing, these strikes continuing for 4 or 5 weeks or as long as it takes. And I think this is the window of opportunity for decades. I mean, he said I'm talking about when he came out and he announced this, President Trump, he said, probably won't have this opportunity again for generations. This is the opportunity for the Iranian people to take their own government back as soon as America has ceased the bombings and all of those things. So I'm really excited about this because I do think that eventually we'll get more stability in the Middle East. We won't have that threat in the Strait of Hormuz, which is definitely an energy threat that would disrupt all of our global international shipping and trade and all of those things. Obviously, drone warfare, taking out potential liquid LNG, obviously making it 50% more expensive because the Qatar energy, that LNG plant itself, just 20% of the LNG supply of the globe. So I mean, this is disruptive. The markets don't like disruption, Luke. So that's why you saw immediately the stocks pulling down, a rotation away from treasuries. Initially, we would see rotation into treasuries, pushing the yield down. We got below sub 4% on the 10-year. But then what happens is the safety gets bypassed and saying, oh, now we've got an energy problem, we've got an inflation problem. So now people are going away from treasuries and going to metals and crude and all kinds of things that would be positively impacted. So there's a lot to unpack, Luke. This is disruptive. This is is disruption. The market doesn't like that. But I do think that right now this is front and center, and that the AI kind of route to the downside is paused with this distraction, not that it's over. And I'll just finally say, I know this is a very long answer, but I'll just finally say, if you look at the monetization problem of .com as a kind of a benchmark reference, because the internet was new, e-commerce was new, that was that, we had a 3-year disruption on the monetization side to the downside. So I'm not saying that we're there yet. I think it's way too premature to be there yet, which is why I said it's oversold. It was overdone, but it hasn't, that we're not near the tail end of monetization issues at all, Luke. No.
Well, this is why me and you don't sleep at night. I always say to my clients, I don't sleep at night, so you can sleep at night, because there's so much to unpack here. We only have about 15 seconds here, but I do want to say, you take a look at software, the IGV, I think we're 10% below 2021 levels. Microsoft's only like 10% above 2021 levels. So lots of parts of the market are basically already in a recession or bear market, and you couldn't tell that from the indices directly. Is there any specific area you just are so passionate about right now? 10 seconds, 15 seconds.
Well, I'll just say I'm always big believer in gold and silver. Silver is routed down because of the industrial uses, obviously disruptive with this going on in the Middle East, but I'm definitely believing that commodities, as the central banks of the world have to Basel III proof up their reserves, I do believe that commodities still have a longer runway.
Rebecca, awesome stuff.